again with Ask Housing. This time you've asked us about the GST. How will the GST impact the property market? How will it impact you as home buyers? So we are here hoping to get you some answers. I'm Jhumur Ghosh. I'm the editor-in-chief of Housing.com News. With me is Digbijoy Bhowmik. He heads the policy division for RICS South Asia. RICS is the Royal Institute of Chartered Surveyors. Digvijay, by training, is an urban planner and architect. He has extensive experience in housing, urban development and infrastructure, and he's currently specializing in policy research amongst many, many other things. Digvijay, thank you so much for being here.
My pleasure.
Yes. So I'm going to start off, with a more macro question first, because I want to set the context before we move into the more specific ones. So GST and real estate. What's happening? How is the business environment responding? How are home buyers feeling about GST?
Like any other new tax, there are bound to be questions, apprehensions, misgivings, not necessarily real misgivings, but also some impressions.
Sure.
But then all of this is resolvable. To begin with, I would go to the underlying principle that GST is fundamentally not taxing you on anything that was not taxed earlier. This is a very clear thing that we should be keeping in mind when we are talking about GST and how it's supposed to actually play out, right? That being said, we still don't have a live application of how GST pans out over the entire course of transaction, development, construction, handing over, everything. So right now, a lot of what we are expecting in terms of what the actual numbers will be, whether prices go up, prices go down, this is still in the realm of conjecture. That being said, we may need to wait out a few months before the first actual transaction actually happens and input tax credit is accounted for. And then we will probably have a much more clearer idea of how these things will work.
Yeah, so I think you're already preempting some of the questions that our viewers have sent. I quite like this question because it touches upon various points. So Bharat Ahuja asks that under the GST, it seems the builder is free to purchase building materials from the open market without any assessment of the business activities, and the whole liability is borne by the flat purchaser. Many taxable items such as cement, steel, electricity, sanitary items are consumed, while labor components like earthworks are exempted from tax. Why then should flat owners be asked to pay GST on the gross cost of the flat? This seems unjust.
Well, first a few clarifications. Number one, if we are going for a new construction at this time, the very service of constructing a house, whether it's by means of purchase of goods or rendering of a service such as earthwork, it's still treated as a service. And from the construction realm, it will still attract a tax of about 12%. Number two, when we are talking about a formal real estate product, it is fair to assume that the developer, even when he buys from open market, is obviously paying a proper invoice paid, taxes paid kind of purchase from the sources, and accordingly he will be entitled to actually account for all the taxes paid as input tax credit. So therefore, even though there is an 18% or prima facie tax on the finished product, first of all, you're losing some of that tax burden by way of the abatement of land, and thereafter whatever we get by way of input tax credit. So the end result could very well be tax neutral or maybe a marginal increase. So that's not really going to be much of an issue to begin with.
Okay, so you seem to have touched upon the next point that comes up in our next question, which is Sachin Shinde says that I read in newspapers that there is a provision of input tax for builders against land acquired and expenses incurred in development, for which 1/3 of it can be claimed. Considering this, will the cost of properties and flats increase? And this, I must tell you, Digvijay, is like a recurring question, where a lot of home buyers want to know about the input credit that builders will get and whether it's going to get passed on to them. So
Again, I'll go back to the first principle. Like I said, nothing that wasn't taxed earlier will get taxed now. Land, as we know it, only carries conveyance by way of stamp duty, transfer duty, and was never per se service or goods taxable in the first place.
Yes.
Consequently, that will still stay status quo, and consequently that has been accounted for about 1/3 the cost of the complete housing product or the real estate product that has been claimed. For other parameters such as cement or steel or labor, each of them basically carries their own input, carries their own goods and service tax, which obviously can be claimed by way of input tax credit on the final tax component that's basically sold out to the end user, on end purchaser.
Yeah.
Right. So that being said, this input tax should ideally be passed on to you, and the way tax accounting is supposed to happen with Real Estate Regulation and Development Act being in place, there is, I believe, more or less a certainty that a developer cannot go elsewhere but to actually pass on that tax credit on to you.
Is there a specific clause in GST that sort of is trying to ensure that whatever input credit you're getting, it's in your interest to pass it on?
Absolutely,
to the buyers?
absolutely.
Okay. The next question is again something it's interesting. It's a recurring question for us. Rajiv Kumar Saha is asking, I'm looking at booking an under construction flat. What will be the tax that I have to pay? If I purchase a ready to move property, is it that the GST will not be applicable? In that case, is the completion certificate from the competent authority required? Will the prices of properties reduce after the implementation of GST? I know it's a bit of a loaded question.
Okay.
So
let me see. I understand this is actually three questions rolled into one.
Yes.
I will answer the second one first, because that should put paid to the entire issue of completed real estate products.
Okay.
Like I have said, since land, or should I say property, prior to the existence of VAT or GST did not ever attract any additional taxation, the same principle will continue to apply even now. Essentially, we say that for a property where occupancy certificate or completion certificate has already been obtained, no GST should apply onto this particular range of products.
Yeah.
However, that being said, the occupancy or completion certificate will obviously be required in such a situation. It's a little like saying that this thing has a parity with a resale product.
Yeah.
I mean, like I had explained once before, if I am a developer and I am building something, once I have gotten a completion certificate or an occupancy certificate, I now hereby own the property.
Yeah.
And therefore, when I am selling it, it's from one owner to another.
Yeah. Yeah.
So the only taxation that you should be paying for this is what is there with respect to stamp duty,
Yeah.
or transfer duty or cess and whatever.
Yeah.
Now I'll come to the other questions.
The under construction.
The under construction part, yes, this will most certainly entail GST, but like I said, there is a integrate play of what the developer is himself or herself passing over to the various vendors of goods and services, materials, construction, labor, and then there's the 18% GST, and then there's the 1/3 abatement that you basically get on account of land. So 18% minus a third, that makes it down to 12%, minus whatever input tax credit that the developer should have gained over this entire period of construction, including what is incident at the time of when you are making your payment, assuming this is a construction linked payment. So that being said, as I had probably said a little while ago, we could very well emerge as tax neutral,
okay,
or maybe marginal.
And that seems to be a common
Yes.
sentiment in the industry. So, the next question which has come to us from Abdul Joshi, it sort of, I think, will bring us, some further clarity. So, he is asking, my builder told me that he has paid service tax and VAT on my flat. I have only paid the booking amount and the agreement is yet to be done. How will GST affect my future payments, and will bank loans also be affected by GST? This again is a very, very recurring question that we have received.
One thing that Mr. Joshi has not said is whether or not he is buying a property that is under construction or the property that is completed.
Okay.
Now, I am assuming that when he has paid service tax and VAT on the flat, it obviously is a matter, it sounds more like a completed product.
Sure.
In which event, this will be treated as the same way as a, should I say, as a finished product, provided the developer should ideally be showing you the OC and CC, meaning occupancy or completion certificate as may be applicable, in which case it goes all the way out of the GST realm. However, if it is an under construction property, a big question that will arise is what is it that the builder has actually paid VAT on VAT or the service tax on. But that being said, under construction properties typically don't go for this sort of a regime, not at least after post 1st of July.
Okay.
So that being said, again the whole issue of input tax credit and the whole issue of finally making it incident at 18% minus 1/3, that is 12%, minus input tax credit will eventually come to it.
So I'll move to Sagar Chawla's question now. This is again, there are quite a few components to it. So he says, I was told by a real estate broker that after GST, the registration amount will be calculated on the living area and not on the super area. Secondly, how much truth is there in the statement that builders will pass on the input credit to end customers? That comes up again. What will happen when the builder is giving possession in the next 6 months? He must have purchased the entire construction materials by now. In that case, will there be any amount credited to the end customers by builders? I think this is an interesting question. Again, touches upon a lot of the things that we already.
I will first clarify the first matter on the whole issue of living area and not super area.
Yes.
First and foremost, the whole issue of living area, I believe you probably want to say carpet area, which is the legally correct term under Real Estate Regulation and Development Act 2016. This per se is only a statement of what you are meant to disclose and not a basis of computation.
Sure.
Insofar as tax is concerned, when you are essentially buying a real estate product, you are, let's say a flat for instance, you are buying what we call an apartment. A definition of an apartment is very well enshrined within apartment ownership laws such as MOFA or any state's Apartment Ownership Act, and that comprises not only of the carpet area but also of the structure, common facilities, your share in the land, plus a lot of other things which basically comprises the definition of an apartment or a real estate product, which means even as per General Clauses Act 1899, real estate is basically land and anything attached to it. So there will always be a component of land, real or virtual. Maybe it's just a virtual share of land, but it's always there. So GST will be computed on the cost of this entire ensemble that you are basically buying for money. The matter of carpet area is more of a disclosure factor, that is, what is the actual habitable space that you are buying for your money. This is something that your developer has to necessarily disclose under the provisions of Real Estate Regulation and Development Act. Right? Now, insofar as the second part is concerned, that whether builders will pass on input tax credit to the end customers.
And he's also asking that he may have bought all of his construction materials by now. So I think he's made a valid point in terms of the timelines involved. So what
I am guessing here that when a contractor, a developer has already bought the necessary materials by now, he has obviously bought them in white with tax paid invoices and everything. So there is some kind of an accounting trail available with him. Now, if he doesn't use this, then he will be absolutely required to pay the 18% minus 1/3, that is the 12%. And the moment he does that, some of his other competitors who have maintained that particular same paper trail and will try to claim input tax credit will simply outprice him. So there is absolutely no way why this person will try to basically not avail this input tax credit. So in other words, we are essentially saying that while there may or may not be an absolute binding requirement for a developer to pass input tax credit, the market forces will ensure that this is basically passed on.
And what about the possession? He's asking, what if I'm taking possession after 6 months?
Fair enough.
Will that have any impact whatsoever in terms
No,
of?
it's just the normal GST cycle as it will go. That is, whenever the GST is levied, it will be levied with consideration to the input tax credit that has been given to it.
So the next question again is one of the most common questions that we've received from all of you. So Prabhat Srivastav asks that considering there's a lot of confusion over GST's impact on real estate, should I postpone my property purchase? This is very, very commonly asked question.
If I were in your shoes, I would probably have just one question to ask myself. Am I investing into a completed product or an under construction product?
Okay.
A completed product will not attract GST. When I mean completed, I mean with an occupancy and a completion certificate. And an under construction product will attract GST whether you buy it now, whether you buy it 6 months later, whether you buy it a year later. The system will very well be in place.
Yeah. So Digbijoy, we seem to have gotten a couple of questions even while we were speaking. So one of the questions that our viewer has is, will GST have any impact on stamp duty? Now, this is an interesting question, as I'm sure you would agree on that.
First and foremost, one should be very clear about the fact that GST and stamp duty are completely unrelated, except for the fact that they are both incident on the same, should I say, article of real estate.
Okay.
And that is also one of the reasons why why stamp duty has never been subsumed into it.
Yeah.
Let's, however, look at the fact that when you pay stamp duty, you are essentially paying a tax on legal recognition of a document.
Sure.
Now, there is, however, a section of maybe developers, even interested parties, I would say even consumers, who will be asking this question, and I'm sure who are also asking, why should we be paying two different kinds of taxes on the same product?
And you've had developers' bodies, raise the point that,
Yes.
stamp duty should be abolished. Now the GST has come into effect, so there's definitely a sentiment there.
To be very frank with you, they do have a point because, like I said, stamp duty can be levied on a whole lot of instruments, including, let's say, registering a partnership deed, or let's say the deed of adoption or something like that. But in the case of stamp duty, in the case of real estate, what is basically happening is that the stamp duty is being levied as a percentage of the sale consideration, almost in the same manner how GST would be computed. So, which is the reason why it carries the impression of being two taxes incident on the same article. What it has, however, done is that the amount of tax that is actually incident on the entire value of materials plus profit plus labor plus everything, it is absurdly high. It is still very, very high. And maybe it is time government should consider, assuming the fact that the net effect of GST is not tax neutral, to consider a different basis of valuation when stamp duty is computed. Rather than actually saying that stamp duty should be subsumed. It is not subsumable, but yes, the basis of valuation can definitely or should definitely be considered.
Yeah, I can see that we've got one more question that's come in. So our viewer asks, will GST make home loans more expensive? What do you think?
A little bit early to say, because we are still looking at a situation where the first transactions may not have actually happened. So we still don't know how this thing will eventually pan out. Maybe a few loan documents later we'll be knowing how exactly banks are reacting to it. But my general understanding would be it will not be very different from the way how VAT was treated during the composition scheme in most states. So I believe the same kind of principle is going to play out. So if the net tax impact is higher or lower or whatever it is, or let's say it's neutral, such will be the effect on the EMI or the loan as well.
So my last question to you, Digbijoy, is, and you've touched upon it a little bit, what is your assessment? Will homes become more expensive? We're going to see a status quo? Will it become slightly cheaper? And because this is again something that all home buyers want to know, how do you think GST will impact the costs of homes? What's your assessment?
Looking at just GST and nothing else, all other things being equal, GST will probably not impact homes in any manner that is very radical or very, should I say, out of the way, or it will not be a fundamental upset in the trend.
Like you said,
it's most probably going to be tax neutral. But then, like I said, we still have to see a few cases play out before we can actually assume it. However, like I said, all other factors being neutral, we must not also ignore the fact that GST today exists in parallel with the Real Estate Regulation and Development Act 2016, which has its own compliance costs, which has requirements by developers to maintain 70% of their operating finances in an escrow account. So these things may, however, have their own costs. and which are not necessarily related to GST.
Yeah.
So if I look at these sort of situations, we could see fluctuations there. But
Yeah.
remember, this has got very little to do with GST.
Yeah. And like you
Right.
said, still early days to like make very, very strong statements and very etched in stone statements.
Probably 15 to 18 months time, we should be knowing how exactly this thing pans out.
Yes.
We'll have several nice cases to actually look at.
Sure.
And who knows, maybe somebody might even take a call on whether or not real estate is still to be put in that same bracket or maybe put in a different bracket altogether.
Fantastic. Thank you, Digbijoy. Well, that's all that we have time for today, but we will be back with more. Please watch out this space. Do let us know in your comments what